Hey, what's going on, Wolfpack Nation? It's the Wolf. Hopefully, everyone's having a great weekend. It's Sunday. Today, we're going to start a new series that we used to do back in 2019. We're just going to do weekly trade recaps. So this is from week 29 of 2021. If you guys like this idea, please give us a thumbs up. Maybe subscribe to the channel. That way we can kind of get a temperature of what kind of content you guys are looking for. But again, let's just go ahead and jump right into it. So AEHR, we took this trade on 7/19. Again, these are all the trades that we posted inside the room this week. So AEHR, we had eyes on 7/29, but there was some competition on the bid. And what we mean by competition on the bid basically is there's trapped downtick into an expansive push, and then we see here competition on the bid, and you can see this on the level 2 in the tape. You can feel it. It's just kind of some propping action. They're holding it up versus the prior consolidation imbalance. And what we mean by imbalance is there's expansive push into consolidation and then trapping. And you can also see this is a little bit of a megaphone pattern, right? We monitored this at 26 degrees, and we're always looking for math on the chart. Not to get too technical, but we're looking for math on the chart, and you can see that this is just this is a trap in our opinion. So there's an imbalance. They have maybe 70% imbalance to downtick on the short side. They push it up, competition on the bid. Maybe they get some downtick to stop out. Then we see like a roasted duck pattern, and then straight into the expansion phase here. We had short interest on it, but we saw this just competition on the bid, high trapping here. So we exited the trade for basically break even, and we took it off radar. That was AEHR on 7/19. So here you can see CYTK. CYTK was high institutional ownership. Also, the short float percentage was pretty high, and this one was just impressive overall with the pre-market strength. So we scaled in about 20% of our allocation with looking for higher. We wanted this above. We had eyes also on 3016 bid-ask interplay up here, but we wanted a little bit higher. And the reason why we scaled so intently was because this one had downside potential. So we're always trying to build into a position. Basically, at the end of the day, again, this is just our opinion, but at the end of the day, all that matters is your average and your size in relation to the separation of your average to your risk. And so basically, we're looking for high RR plays. In our opinion, trader longevity is sustained exposure to high risk reward scenarios. And in our opinion, this didn't pull that much. You can see we had targets down 26. We wanted this lower, but this was a situation where the downside range was high. So we were trying to build a position. We didn't get the upper adds, but we're happy with this. You can notice that we're not, targets are passive. We're trying to buy weakness, right? We sell strength and we buy weakness, and we feel like that's half of the edge. We don't like to get in there aggressively on market orders, and we're basically trying to trade on high logic, low emotions. So that was CYTK. AHPI. We got in small here. This was 5% of our allocation right here, and then we started to add a little bit higher. Normally we would like to stop out here, but we got swiped on. I mean, huge swipe right here. So we had a choice to try to maybe stop out here, or we could add. And we did add. We wanted a higher build, but we took profit early. We took profit basically where we had HTF. We had higher time frame liquidity shelves here, which we were watching. So we like to trade the shelves. But you can see here, basically, we're looking at the soft supply of the lower consolidation here. You can see that we have some soft supply flipping to a soaky bid. When we see that, that's when we're starting to see, are we going to exit the consolidation phase, right? Because we like to break the markets down into just basic. We have the consolidation phase, we have the expansion phase. And basically, it's our opinion that inside the consolidation phase, the larger participants are trying to create a liquidity imbalance. And if they can create a liquidity imbalance, maybe 70% downtick, let's say to 30% uptick outside participation, then we can see that it would be incentivized for them to go counter flow to the upside. And that's what we saw here. We took profit off early, and we were just watching some tape here, and we noticed that there was an imbalance, and then we ended up catching the short-term buyer exhaustion cleanly, very clean here at end of day. So that was AHPI. Let's see, we have NRXP. NRXP, this is still on Monday. We took quite a few trades on Monday. We had eyes on 1410. We stopped out initially. You can see here we didn't like the trade. We stopped out and we came back in. So we were watching a little bit of tape. The same level, right? 1410 is a higher time frame liquidity shelf. So we have eyes on this. We believe that this area to be inflectious, meaning that to the upside or the downside. If you have a short thesis, that if 1410 is holding, then we're going to deny that thesis and maybe even flip long. But our thesis was inflectious off 1410, meaning that we're trying to get this trade off on tight risk, and that widens the risk to reward ratio. And you can see here, we stopped out at about 20 cents of risk, and we're catching lower targets down here at 11.5s off of 14.5. I don't have this worked out, but 20 cents of risk is 5 to 1 per point. So we're looking at 5 to 1, 10 to 1. I mean, $11 is a theoretical 15 to 1 on this last 33%. That's what we want. That's what we believe. Trader longevity is sustained exposure to high risk reward ratios. And that's our opinion at Wolf Trading. NRBO. This one was a little bit emotional here. So we had eyes on this, and a couple other guys in the room also took some trades on this, but we had eyes at $5 and $5.45. And then we thought these levels were good. This was an operator error. So again, at Wolf Trading, we like to stack the winners and we focus on the losers. This is a losing trade. This is an operator error. This is what we don't like to see. So the error is we didn't stop out tight on 5, and 5.45 was the opportunity to re-enter, right? We had eyes on 5 and 5.45. So the operator error was the forfeiture of the 5.45 read. So not happy about this. But again, this is what we're going to study. In a perfect world, we would have cut tight, maybe off of a 5.06 or a 5.12 sustained bid. Exit the trade, maybe we would have caught a little bit of slippage. But we should have got out around 5.15. And we could have re-entered. You can see there's some emotions on the chart here off this expansive push or acceleration to the upside, and we didn't catch the re-entry. And look at the downside. We missed out on this downside exposure. So we're not too happy about that, but we're trying to get 1% better every single day. NURO, I think this was day one on NURO. NURO was just a monster of the week. This one was mentally challenging, as well as Trappy versus the downtick. So the shorts, it was Trappy versus shorts. We ended up doing okay on the front side here. We kind of stayed with the trade. That's the goal. We want to try to ride the mechanical bull until the buzzard, right? Like a bull riding analogy, like that 7 seconds when they hit that buzzard. That's it. We want to try to stay with the algo through the front side and try to catch the move when it does sell off, if it does. And this thing was just a monster. I think we were small red on this trade. We'll be looking at this in relation to lower trading. Recovery push into level up halt, and then the games began. All the orders you can see on this chart are passive, all limit orders, except we use market orders basically when we're closing a position for a loss. So when we're trying to close a position, we want to get out regardless of the spread. We just want to exit the trade right away. That's just our opinion. So that's NURO day one. Here you can see CEMI. So CEMI, this is high manipulation. This was fairly brutal today. We were able to exit the chart. Here's some trade notes from the room. We did it. So we stopped out at 5.06. We got flat, and we didn't start to watch tape until the second feeler fill, which was here. And we immediately saw that there was a rig on. Now, I remember this trade. It was like they had the bid and the ask locked up fairly well. I don't remember what the float was, but it traded very high in relation to the actual float, which means that there was in our opinion, high amounts of static liquidity on the bid and the ask, right? High manipulation. We just got out. We weren't interested in it anymore. Again, this is just our opinion, but that's what we do at Wolf Trading. We don't trade moving averages. You can see we do have the VWAP on screen. We don't trade moving averages. We try to trade real-time data. We trade level 2 and tape at areas of potential support and resistance. LEXX. 4 million float, COVID PR. We had eyes on 886. We didn't take that trade, though. That was pre-market. And then open, ding, 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 level up halt. Looks like there was a chat room on it. So the resumption at 947.31, and we had some short feelers out at 1194.98. We were looking to fill if we saw the resumption gap up. We did take some fills, and we trimmed the position off at 10.5s. Nothing special on that one, just basically a little bit of our strategy. AMC, we have had eyes on AMC, predominantly short bias since the sell-off. We're also watching GME. This trade, we have eyes on 46. We like this level. 46 is a level that we've been trading multiple times. So here you can see we took some profit. And then once our rules state that once we take profit, we have in the money risk. So we trail our risk down to protect the unrealized gain column. And here you can see in the money risk was triggered. So probably at the break of this support here around, 45.2, as soon as we see this break in support here, that's when we believe sellers have the potential for downside continuation, and that's when we trail risk from at the money down to in the money. And I guess we got stopped out on this one, in the money, which is fine, right? If we want to put ourselves in this type of situation 1,000 times, we're gonna come out ahead, and that's what we want to do. We love trading. We want to trade forever, so we want to put ourselves into net positive situations over and over and over again. And here's NURO. Again, this was tough. It was tough versus the downtick liquidity. We stopped out in pre-market. Here's all the live notes from the day. At Wolf Trading, we post our entries, most of them, maybe not every single one. It's tough, to type before we get filled, but we're very verbal in the room, and we post our targets, we post our entries, we post our risk before, we try to stay ahead of the tape in the room, meaning that we don't post. We're not a hindsight. You can see the times that we post are generally before the fills. So I want you guys to see what I see before it prints. That's how we feel like we learn. We don't want to see it and then report it, and then you're going to be like, oh, okay, maybe I guess if I recorded my screen, I could go back. But these are the areas that we're looking at, and we want to, whether we're correct or not, we want to have eyes on tape at the correct location before it prints, and that's our opinion. So here you can see we trimmed the position off 50% of the position before the bell, because this one was tough. So it was not, it was not the best trim here, but we didn't, we wanted to protect. And then we ended up taking some profits low down at 21. And look at 10:33 in the morning, you can see that we were thinking about having a bias flip to flip long at 21.56 support. So that's where we believe that true support was. And we didn't recycle in because look at the pops were very heavy. We didn't have an opportunity to recycle. Maybe if we can see some aggression versus downtick here and we see a high swipe. But we didn't see that. Everything was just heavy, and we took 95% of the position off low 21s. We didn't get long. We could have for a scalp, but we're not generally scalpers here at Wolf Trading. We try to position play the larger move. IPA, here's another example of in the money risk. So you can see we took profit. Generally, our rules state when we take profit, we trail risk. We have we call it trim and trail. It's just a sequencing or trim and trail technology where we just try to protect gains. It's like the middle finger to the algo, right? Once we get in the money, we don't want to give that chart real estate back. Here you can see this is a trash asset, right? IPA, the 30-day average true range is 38 cents. The 10-day average volume on this asset, excluding today's volume, is only 42,000 shares. So this stock trades 42,000 shares. And then all of a sudden, We have a high volume liquidity event. We know what time it is. This is a man versus machine environment, and that's what we like. We track algos. This is what we do. We track them, we trade them, and we try to take them down. They're tough though. They're tough. IPA. That's the IPA. WISA. All right, let's go back and just forget to have it. So basically, the in the money risk. Basically, I just want to show you a little bit about how we trail. So we use soft supply to trail risk. So there would be some soft supply here and down here, right? So we like to have, this would be in the money and then in the money aggressive. We like to have two areas where we potentially want to protect unrealized gain. So this would be in the money risk here, and then at the breakdown of that support, we can have an aggressive in the money risk. And we chose the in the money risk, and we stopped out here. It looks like on a little bit of slippage, but we try to stay above the soft test. Again, that's just our opinion at Wolf Trading, but we want to put ourselves into position. We don't want to give gains back. WISA. So WISA was a manipulated asset. 9 million float. We were watching 546. There's a semiconductor, which has been kind of a hot sector last week. Basically, the trade notes are right here. I made a live trade on this one, but I didn't have the audio settings working correctly, so I apologize for that. But to the guys in the room, but we nailed this one on the top, and we had a 512 lotto out. We reported that, you can see here, at 11 o'clock in the morning, which was before the breakdown here, right around this breakdown, and we got a partial fill. We did not chase it up, and we waited for a price to come to us, and we got flat here at 512 lotto. Algo economics is something that we've been working on very intently in Wolf Trading, and we post all that into the technical room. XBIO. XBIO is, here's another instance of us waiting. We had eyes on 545, I believe. Yeah, 545. Let me just pull it up. Yeah, 545. So we were patient. You can see the expansion here versus trap down tick potentially up into 455. And we had some we had a read on this one in the order flow room at Wolf Trading. We had a tape reading here. We saw a 465 player, and he was hitting it again and again and again. Let me see if I can pull that up. One second. We post a lot of slides in the room, maybe 100 slides a week. But here's XBIO. So again, we see glimpses of the beast through, we see 65, 65. Here's the initial prints that we saw. Again, 465 STKL, that's a short-term key level. Short-term key level, meaning we have eyes on 65. And we didn't add to the position. High volume right here. It was pretty strong. But this is where we were watching. And we saw, micro shelf, 455, right? We're looking at the bid-ask interplay here. These are all slides from the room. We post this in real time. We'll show you guys what we're looking at as we're looking at. So that's XBIO. And we got stopped out in the money. So in the money stopped out. I just didn't want to watch tape here. I was draining mental resources, so I trailed risk at the money, and we got stopped out on this false breakout from the lower consolidation, which is fine. And I was kind of, just hesitant to get back in. But 455 was our level, and you can see we had another opportunity here and another opportunity here on low risk to take that 455 potential inflection. And we forfeited those two entries. I think it was Friday at this point. I think this is Friday now. So NRXP, we were, one second, get back to where I was. Yeah, NRXP. So earliest short interest, a lot of guys in the room had eyes on this one. There wasn't too much going on Friday. So we were watching 23.7. I wasn't interested in this one. You can see 9:52 in the morning. So the stock's like breaking down here low a day. I'm like, people in the room are looking to short it. And I said, I'm not interested in shorting this until 23.7. That's where we believe support or resistance is. At Wolf Trading, we have one setup. We sell resistance and we buy back support. And we're not going to add additional setups until we can try to master that one. And this is just our opinion, but we try to do the right things, and we try to sell resistance and buy support. So here we had feelers out here at 23.64. and 68 and 70, and it was just a miss. We didn't chase it down, and we waited patiently. We kept the orders out, came back, we filled. We took 25% profit off. Our rules state that once we take profit, we trail risk at the money, and we did, and we got stopped out. Now, in hindsight, yeah, I wish I wouldn't have got stopped here because we had a couple points of downside range. But over the course of 1,000 trades or 10,000 trades, is it in my best interest to trail risk at the money? And we believe it is. That's just our opinion. But we try to promote trader longevity at Wolf Trading. Again, so we got flat at the money, no re-entry. Then we had upper levels. Again, we posted these levels at 8:20 in the morning. We were looking at 26.24 and 28.99. And you can see we did have some orders out in the after hours, and we got filled 28.9s, and we're just starting to take profit. So we have, again, the higher time frame liquidity shelves that we teach and promote at Wolf Trading also, they help to train the operator to be more patient. If you don't have upper levels of resistance on high confidence, then it's going to be more difficult, in our opinion, for you to wait for price to come to you. And these lines have really helped a few of the traders in our room who are more scalper mentality to have the patience to fight for price. And that's really the trades of the week. So hopefully this helped for you guys. If anyone's interested in joining the room at Wolf Trading, we do have, we're running a special for summer, $299 lifetime entry. And that gives you guys will have access to our Wolf Coaching video library, over hundreds of over 100 hours of educational content videos in the Wolf Coaching library, as well as the runner's room. So the runner's room is a very powerful weapon tool that we have at Wolf Coaching. We started the runner's room back in February of 2019. And basically all of the runners that we see, we log, and we put them into a searchable index for you guys. As well, we have the order flow room where we go over trades in real time. We talked about volume analysis. We just talk about order flow. We have technical room. We post about 100 slides a week. Here's an example of a long trade that we were trying to take. You know, we call our entries out before we fill. We call this at like 9:37 in the morning. We have eyes on 9:17, and we took it long here for about a point and a half. But we're trying to develop a long game as well. And you know, XBIO, we stopped out, but our first target, we were looking to trim 50% off at 342 and 338. So this is 1052. You know, like I said, we trade in front of the tape. So we tell you where we're trying to target before price gets there. And we stopped out on this false breakout right here, but our targets would have came in, and we zoom in and we took a look at that on the tick chart. And here's our calls right here. You know, in real time. If you have any questions, send me a message, but we're going to continue to do these trade recaps. I know this one was 23 minutes. We'll try to shorten it down a little bit, but if you have any questions or you'd like to join the community, we'd love to have you. So thanks a lot, guys, and enjoy your Sunday. Take care.